makers and market movers. This is The Pulse with Francine Lacqua.
Good morning. Welcome to The Pulse. I'm Tom McKenzie in London. These are your top stories. The US president has made an early exit from the G7 summit, but says his departure has, quote, nothing to do with a ceasefire between Israel and Iran. Donald Trump left the gathering in Canada, having earlier called for the Iranian capital to be evacuated, fueling speculation of greater US involvement in Israel's offensive. In a Truth Social post shortly after boarding Air Force One, President Trump took a swipe at the French president, saying, quote, he has no idea why I am now on my way to Washington, but it certainly has nothing to do with a ceasefire. Much bigger than that. Let's get more from Bloomberg's Oliver Crook, who has been following all the twists and turns of this G7 summit. Ollie, what do we know about why Trump left early? If it's not big enough, if a ceasefire and those conversations aren't big enough, what could be?
Yeah, that's the big question, Tom, and that's what everybody's trying to parse, trying to get through all the sound bites of what Trump said over the last couple of hours, going through all the truth posts that we've got over the last couple of hours. And again, just to get the sequencing down for people who have not been following this to the very last moment, basically we had this Truth Social post by the President of the United States calling for the evacuation of Iran, saying that they should have signed a deal basically when they had the opportunity. Then we got the confirmation from the White House that Trump would be leaving the G7 early. We then boarded Air Force One. He's currently on Air Force One on his way back to Washington, D.C. And from Air Force One is where we're now getting a little bit more information, most recently from Jen Jacobs over at CBS, that she just had a conversation with Donald Trump saying that basically he's not interested in looking for a ceasefire. He wants a, quote, real end with Iran giving up entirely on its nuclear ambitions. He says that the Israelis, he does not expect them to relent on the barrage of attacks over the next couple of days. He says, we don't know for sure, but he doesn't expect that to relent in the short term. He says that he needs to be present at the White House, not in Canada, so that he can be briefed by his team in person in terms of reacting to what to do next on the United States' part. And he also said that he was basically undecided about whether or not he would send Steve Witkoff and or J.D. Vance to negotiate with the Iranians. He was then asked about if he had been briefed on if any sort of military hardware of the United States gets struck by Iran, does the United States have a plan to respond, and in what way? He said that he cannot tell you that, and that he would not basically respond to it. So, of course, the speculation at this stage is which way is this going? Is this going into a direction where there's going to be a huge amount of pressure on Iran, and the sort of bigger than a ceasefire is a deal that's negotiated by the United States? Or does the United States take a more active role in this conflict between Israel and Iran, potentially deploying some more, making more readily available to Israel bigger bombs, or potentially taking a direct hand in itself? We should say that if the United States were to get involved directly, that goes very strongly against, the principles of the Trump doctrine of foreign policy, which has really been to not get involved in foreign conflicts. But at this point, I think deliberately by the Trump administration, there is a lot of strategic ambiguity in terms of what Trump is going to do next. That is going to play into his hand, and ultimately he wants to have a deal. But I think it's fair to say we are in the maximum pressure part of the negotiation.
OK, strategic ambiguity. Bloomberg's Oliver Crook, thank you very much indeed. Let's stay on this topic then. Israel and Iran continuing, of course, to exchange missile salvos, despite reports that Iran is seeking talks. Israel targeted Tehran, including the state television station. Let's get more with Bloomberg's Dan Williams, who is usually based in Jerusalem. So, Dan, Iran wants to de-escalate, but Israel is determined to push on with its goal, and it has framed them in two specific ways. What is Israel's ultimate strategy here?
I think we can know for sure that de-escalation, it's not a strategy that would be considered rather thin gruel as far as the Israelis are concerned, having committed themselves to a very well-planned and, according to them, very successful so far offensive. So their plans, as at the outset, their demands are for an end, whether through their military force or perhaps combined military force with the United States, time will tell if that will happen, or through a negotiated deal, an end to the Iranian nuclear program, an end to the missile program. Netanyahu has also added that. He described an end to the Iranian reign of terror in the Middle East. He said this in an interview last night. That's a bit hard to pass right now, but it would suggest he wants to see a dismantling of its regional connections, especially with groups on Israel's borders, which Israel has been battling for the last 20 months. So Israel has no patience right now for talks for the sake of talks. If there are going to be talks, it wants a conclusive deal.
OK, that's interesting context, given what we're hearing around potentially US officials getting involved in conversations with their Iranian counterparts. We have lines crossing from CNN right now saying that the US intelligence assessment is that Iran was years away from a nuclear weapon, that being reported by CNN. In terms of the domestic support for this conflict in Israel, where does that stand?
Domestic support is very strong. Bloomberg reported yesterday, had a first look at what I believe is the first poll issued. Keep in mind that this flare-up, it seems quite long in duration. It's only 4 days old. That poll found strong 70% support across Israelis for this. The one weak point of their support is on whether Israel can alone tackle, finally, Israel's nuclear programs without US support, be it diplomatic or military. Also, Israelis, in the long run, should they suffer thousands of casualties, and there have been casualties, but it's not in the thousands, there would be a third of them that would, at that point, suggest it's not worth the cost.
Dan Williams, thank you very much indeed. Usually, of course, based out of Jerusalem for us. Now, joining us for a market look, at least a market reaction, an assessment as to the Middle East tensions, the geopolitics, but also looking ahead to the Federal Reserve and central banks tomorrow. Let's bring in Jim Reid, head of global macro and thematic research at Deutsche Bank. Always putting out morning notes as well, that a must read for the team here at Bloomberg. So we appreciate that, Jim. Let's start with what's happening in the Middle East then, and how markets should be reacting, because up until this point, we've got negative picture in terms of the futures stateside, so it looks like there can be downside pressure on equities. You're certainly seeing that in the European equity space, but there would be an assessment from many that ultimately the equity markets have looked through this historic flare-up in terms of the conflict between Iran and Israel. Does that relatively benign take by the equity markets on this unprecedented conflict remain, do you think?
Well, I think the market is probably getting a little bit more used to geopolitical risk. So our equity strategists have got a table where they bring out on these sort of events, which shows that the normal kind of playbook is that the S&P falls around about 6% on average around about 3 weeks, and then makes that ground up over the coming few weeks. So normally geopolitical events have a short negative impact on the market, and then within a month or two, you're back to where you are. So I suppose as geopolitical risk gets more prevalent, we get used to that, and therefore maybe you need a real bigger escalation to get a bigger impact on markets.
Would that be, for example, major disruption, or attempts by Iran to block the Straits of Hormuz? What kind of move would that be? How would the equity markets react to that, what is still seen as the worst case scenario for many looking at the conflict right now would be Iran's attempts to close the Straits of Hormuz, which so far they have not attempted to do?
Oh, if the Strait of Hormuz got closed, then our guys think oil will go to 120 or head to that direction, depending on how long the Strait was closed, etc. And that would be a big negative for the equity market. You would still think that it would be resolved at some point, and you would have the same kind of playbook of a sharp fall and then a sharp recovery, but it would probably be bigger and it would take longer. So that is the real escalation that would cause this event to be a big factor in the summer.
And you say as well in your latest note that dropped this morning that the bar for a more significant sell-off is higher this time. So you give us that historical context, which is really important and useful, but the bar is higher right now for more significant drawdowns. Why is that?
Well, I think on our analysis, I think the market is still a little bit short on US equities, so or underweight. So I think that probably means that you probably do need a bigger event. Not saying it's not going to happen, but I think the technicals are probably a little bit more supportive than they could be at this point.
I want to run through that scenario again. Worst case scenario, as seen by some, which should be the closure of the Straits of Hormuz, and the inflation impact. Brent at 120 per barrel in that scenario, according to you and the team. What would that do in terms of derailing the central bank's projections around inflation?
Yeah, I think it would cause another major complication in their kind of big formula of what they do with rates. So, I mean, the Fed have got so many conflicting forces at the moment. And, tomorrow I think the Fed are just going to stay put and not really give too much away. And the oil price would give them another reason just to sit and wait.
Do you think Powell sounds hawkish tomorrow?
No, I think he's relatively balanced, but I don't think he gives either side anything to really feed into. I think he wants to keep all his cards on the table, all his options available for when he knows how the tariff situation will evolve. And as I said, the oil situation just gives him another complication.
Do you think there's a mismatch in terms of market pricing for 48 basis points, so almost 2 cuts this year versus what we have been hearing from Fed officials and the data?
Yeah, I mean, look, the Deutsche Bank's view for this year is that there's one cut, and that's in December. We don't think the Fed are going to have the luxury to cut earlier than that. Obviously, the futures contracts are swinging in both directions massively. So we would still say the futures contracts are probably a bit too dovish from here.
The BOJ drawing scrutiny again, less about the decision, of course, to stand hold, which was fully expected at 0.5% for the base rate for the Bank of Japan, but more around the decision around the bond purchases and easing how they're thinking about that, essentially allowing a little bit more liquidity in the system. Because of the volatility at the back end, how much focus is there right now on the BOJ and the bond market there? Have they kind of capped that concern at the long end, do you think?
Yeah, look, after the kind of mini turmoil a month or so ago, I think the Bank of Japan have communicated with the market reasonably well, so that today's decision was pretty much expected by most people. So a kind of a non-event. I think that the real key here is kind of political and fiscal from Japan. So in late July, you've got the upper house election in Japan. Last year, in the lower house, the government lost their majority. And you have the coalition partners and you have the opposition calling for a cut in the consumption tax. And if we move in that direction, then you start to raise concerns about the fiscal again. So I think we've moved on now from monetary policy for a little while to what happens in politics and fiscal in Japan. So that will be the story, I think, in July and August.
OK, very interesting in terms of what to think about in July and August for Japan. Do the bond vigilantes get a prod and a wake-up call again in the US, given the tax and spending bill that we've kind of temporarily taken an eye off, at least some of us have, and that continues to work its way through the Senate?
I think as a minimum, I would say that the US is on a totally unsustainable debt path, but I think everybody in the market doesn't know when that unsustainability kind of kicks in. But I think with events this year, it has definitely been brought forward. And therefore, I think we might be on the kind of last roll of the dice in terms of being able to just expand the fiscal without any constraint, if that makes sense.
And on the BOE, before we let you go, because that decision comes through this week, again, not expecting any move from the Bank of England, but the data has come through weaker. Do we expect a slightly more dovish commentary from the Bank of England? Is there a catch-up in terms of where the BOE was positioned last meeting versus what we expected to hear? Are they going to soften the markets maybe for further cuts?
I think at this stage that's our kind of core view, that they soften the market up for an August cut. And then again, they kind of want a little bit of optionality because there's a lot of moving parts here. But I think...
So two for the BOE this year with the next one in August?
Yeah, I think that's probably where we sit. Yeah,
okay.
So we're not too far away from the street. I think we're a bit more hawkish on the Fed, so the Bank of England a little bit more aligned with the market.
Okay. Jim, thank you very much indeed. What to think about for the BOJ come July, August in terms of potential fiscal stimulus there. And then, of course, December being the rate cuts for the Fed this year. That is the view, of course, of Deutsche Bank. Jim Reid, the team there. Global head of macro research at Deutsche Bank. Also, of course, weighing in on the BOE, expected to cut in August and potentially once again this year. So two more potentially coming for the Bank of England. Coming up, as the US president calls for the evacuation of Tehran, we break down the latest news coming out of the region. Of course, what we've been hearing from US President Donald Trump as well. We're also going to speak to Nicholas Hopton, the UK's former ambassador to Iran, someone with deep experience on the thinking in Tehran. Stay with us. That is next. This is Bloomberg. Welcome back. US President Donald Trump has left the group of 7 leaders meeting in Canada early to deal with the Israel-Iran conflict, but played down the chances of a ceasefire. Israel has continued to bombard Iran in a bid to disable its nuclear program, and Iran has fired masses of missiles and launched drones at Israel in retaliation. Joining us now is Nicholas Hopton, Director General of the Middle East Association and former UK ambassador to Iran, so someone with deep experience of the region and of Iran specifically. Nicholas, thank you very much for taking the time. Are we getting closer to a point, do you think, where the US is drawn more directly into this conflict?
Thanks very much for having me on the programme. I think that the last 24 hours have seen some interesting developments on the American side. Clearly, President Trump left the G7 summit early, and there doesn't seem to be a total meeting of minds with his G7 colleagues. And I understand he's meeting with his National Security Council to work through the options for what the US should do next. Clearly, the US was slightly blindsided by Prime Minister Netanyahu's timing of launching these attacks on Israel last Thursday night. And maybe the White House is not particularly comfortable with a situation where there seems to be a lack of US control over developments. And if anything, Prime Minister Netanyahu and Israel seem to be calling the shots and dragging the US unwillingly into another Middle East conflict. So I think the next day or two will be very important to see how the American position evolves, and in particular, whether Donald Trump can somehow square the circle of supporting Israel in their offensive and condemning Iran and its nuclear ambitions, at the same time as saying the US still wants to see a deal and pursuing negotiations.
And if the US was to be drawn in, for example, using their aircraft and the bunker buster bombs that they have, that apparently and seemingly, according to the reporting, the Prime Minister Netanyahu is lobbying for, what would the regional response to that be? Could you still have a relatively so-called contained conflict in that scenario, or would that really trigger a risk of a broader conflict in the region?
I think Israel has clearly taken a gamble in its timing and the magnitude of its attacks on Iran, and its ambitions seem to be at the higher end of expectation, and possibly very optimistic in hoping to completely eradicate Iran's nuclear facilities, their missile capability, and implicitly see some sort of regime change. I think if you saw the scenario you just outlined, Tom, where the US came in and there was attacks on Iran's nuclear facilities with a chance of actually doing the real damage that Israel alone is probably incapable of doing, at that point the escalation would ramp up considerably. You've already seen countries in the Gulf talking to the Americans and intervening in the hope of trying to de-escalate and get some kind of negotiations going. I think that would intensify. And of course, as your previous correspondents have said, Iran hasn't played all its cards yet. And the Straits of Hormuz, which would have impact on the global economy and oil supply, is something that Iran may choose at that point to try and close. And that would obviously further ramp up tensions and escalation.
OK, so that could be the trigger, that could be the catalyst for Iran to look at trying to close the Straits of Hormuz, with all of the implications of that. What is your assessment of how vulnerable Iran's regime is at this point?
It is in its most fragile situation probably for many decades. Your viewers will be aware of the protests that took place from 2022 onwards, after the killing of Mahsa Amini, the lady who was beaten up by the authorities, thugs essentially, and died, and that led to widespread protests. That didn't produce any lasting change in the regime. However, the vulnerability of the regime is clear, particularly given its military inferiority to Israel at the moment. And I think that the risk, though, of that turning into popular protests at the moment seems relatively limited, because actually Iranians are much more concerned at the moment with their own security and safety in Tehran. And I'm hearing that many are leaving Tehran, the capital. Whether that turns into popular protests is quite a big step from here.
We often talk about reformists within the regime, at least the political apparatus of Iran and the hardliners. What is your sense of where the debate may be if this regime survives around the question of whether or not to formally pursue a route towards a nuclear weapon?
The Iranian regime is complex. It's often perhaps depicted too simplistically. It's not monolithic. There are many voices within it. There's a spectrum of opinion, and the top of the pyramid, the supreme leader, listens to the different voices and at different times takes different courses of action. He took one course of action last summer when he allowed and I use the word advisedly, allowed a relatively moderate regime insider to form a government in the hope of engaging with the West and pursuing negotiations, which of course happened with the US once Donald Trump came to power. I think at this point there will be many voices within the regime counselling that Iran should find a way to reconcile with the US and negotiate a deal, even if on unfavourable terms perhaps, but live to fight another day, because at the end of the day, regime survival is at the top of the list of priorities.
Do you expect them to reach out at any point, Iran, more directly to China and Russia in terms of material support or diplomatic support?
I imagine that's happening already. The relationship between Iran and Russia has developed a lot in recent years with mutual support since Russia's illegal invasion of Ukraine. And the relationship with China is important because, of course, Iran exports most of its oil to China. And so I think both of those countries will have a role to play, particularly in any settlement, as they were supportive of a deal, in fact, when the US was negotiating with Iran.
Nicholas Hopton, we appreciate your time. We've run short of time, but we appreciate your insights. Director General of the Middle East Association and former UK ambassador to Iran. There's plenty more coming up. Stay with us. This is Bloomberg. Good morning. Welcome to The Pulse. I'm Tom Mackenzie in London. These are your top stories. President Trump makes an early exit from the G7 summit as tensions escalate in the Middle East, but says his departure has nothing to do with a potential ceasefire. The US president warns people in the Iranian capital to immediately evacuate amid fears of further escalation in the conflict. And in markets, US equity futures fall on Trump's comments. Investors also weigh the BOJ rate hold and look ahead to tomorrow's decision from the Fed. Let's get more on one of our top stories, of course, our top story of the day. The US president has made an early exit then from the G7 summit, but says his departure has, quote, nothing to do with a ceasefire between Israel and Iran. Donald Trump left the gathering in Canada, having earlier called for the Iranian capital to be evacuated, fueling speculation of greater US involvement in Israel's offensive. Let's get more with Bloomberg's Bill Ferries, who's been working through the details. Bill, what do we know about Trump's early departure? What may have triggered it?
Yeah, I mean, I think we could spend the afternoon trying to sift through the meaning of some of Trump's comments and tweets over the last several hours. He is still on Air Force One, traveling back to Washington, expected to land sometime in about the next hour. He's put out these statements saying that he's not returning because he wants to work or he thinks a ceasefire is urgent. He did say, however, to a reporter on the plane that he feels like he needs to be in Washington to better stay on top of events. So he has called for Iranians to evacuate Tehran, and he has continued to say that he thinks a nuclear deal is possible. So it's really kind of all over the board. He did say that he doesn't see either side, Israel or Iran, letting up in their barrage of missile attacks and bombings of the other country. So after more than 4 days now, it continues to be a very tense situation. And the world leaders obviously gathered at the G7 in Canada, concerned that this is a situation that could escalate.
And this conflict has clearly overshadowed the G7 summit and any conversations about trade. And yet there were those conversations. Was there anything else that came out of the G7, out of Canada, in terms of progress on the story and the conversations, the dialogue, the negotiations around trade, Bill?
Yeah, so there was this agreement between the UK and the US at the G7 meeting to really kind of follow through on that framework agreement they reached, I want to say, a little bit more than a month ago now. And that would include things like giving the UK civil aerospace industry duty-free access to the United States. It would allow the US to export more agricultural products, including beef, to the UK, really kind of putting the flesh on the bones of that agreement, that framework agreement that was reached previously. Of course, the context of all this is that those so-called reciprocal tariffs are still paused, but that deadline for reaching deals, July 9th, is coming up very quickly. Japan in particular had hoped to make some progress with the Trump administration at the G7. They failed to do so far. I think a lot of other leaders would have also liked to have seen a bit more progress made. But as you mentioned, President Trump leaving those talks early. So one of the big questions on the trade side continues to be how firm of a deadline July 9th really will be. Will the U.S. consider extending that? Will the Trump administration just announce what tariff rates are for a whole range of countries? Or will there be some deals in this final, basically like 3.5 weeks or so before that deadline arrives?
OK, Bloomberg's Bill Ferries in Singapore as we count down to the trade deadline as well, July the 9th. Not a huge amount of progress, as he was saying, in terms of trade moves at the G7, apart from the UK and the US. Now, US President Donald Trump has signalled, meanwhile, that he is in no rush to impose tougher sanctions on Russia. Trump expressed concern that imposing sanctions would cost the US, quote, billions and billions of dollars. European leaders have pushed Trump on new sanctions, arguing that it's critical to forcing Russian President Vladimir Putin to negotiate in better faith to end his war in Ukraine. Airbus has dominated the Paris Air Show, meanwhile, with orders worth as much as $17 billion from Saudi customers. Let's take you live to the show now. Bloomberg's Guy Johnson has been there, of course, since yesterday and continues with key conversations. Guy.
Morning, Tom. It has been a relatively quiet show. Yes, Airbus has dominated. Airbus has dominated because Boeing's not here. I think it's probably the best way of putting that. Its CEO, Kelly Ortberg, has decided he's going to focus on what is happening with the investigation, the ongoing investigation into the crash that took place back end of last week in India. We're still waiting for news on what caused that crash. We understand that the second black box has now been found, so that will further progress that investigation. Let's talk about that. Let's talk about what's happening in the wider industry. Andy Cronin is the CEO of one of the world's biggest lessor companies, Avolon. Great to see you. Always a pleasure. Thank you for the time. You've got some 87s in your fleet. Are you hearing anything? Do you just wait for the FAA at this point in terms of what guidance you give?
Yeah, at this point, obviously our condolences to everyone impacted by the tragic incident. At this point, we do have to just wait for the experts to determine what's happened and then the best course of action thereafter.
The Indians are making some checks, but it doesn't seem to be replicated elsewhere. Is that normal practice?
Yeah, I think any incident like that will involve a certain amount of second guessing or higher level of scrutiny to be sure, as we would say in Ireland. So I think that everyone, including Air India, will await the formal guidance and await the formal feedback from the regulators and from the investigators.
It's one of the factors that has made this show a little quieter than maybe we would have anticipated. I'm sure you've picked on that, up on that as well. But the underlying story is still one of really strong demand. This is an industry that is kind of struggling with a really strong demand picture and a really kind of tight supply picture. Is that still the takeaway? Did you see anything changing? Is anything kind of evolving on that front?
Yeah, absolutely. What we see from our customer base around the world is resilient short-term, medium-term and long-term demand. And we see conviction from airlines in their fleet plans looking out over multiple years. So the demand picture is there all around the world. And these long-term demographic-driven trends continue to drive the industry, continue to drive the growth of the industry. And then we also see quite an attractive investment proposition for the industry as well, up and down the value chain, because you touched on the supply chain constraints. And that's really going to limit the production aspirations of manufacturers and the availability of aircraft, we believe, for much of the next decade. You couple that with the stability of the technology, where we're still bedding in the latest technology platforms, and they will be around for at least the next 15 years before there's any viable large-scale contender. We think those ingredients come together to make quite an attractive value chain for the industry.
Actually, you bring up the next generation, or you bring up the next sort of iteration that this industry is going to see. Let's go down that rabbit hole for a moment. Airbus is talking about having a new narrow body by 2030. Does that feel early to you? They've got a backlog that's enormous. Why on earth would you want to build an aircraft that early when you've got so many aircraft on order?
Yeah, and I think they've been clear that for the larger narrow bodies, that's more like the end of the 2030s timeframe before that's actually in service. And so
but the process starts. Maybe it started now, but we could start to see aircraft at the beginning of next decade.
But I think that is one of the great advantages of the industry and one of the great disadvantages of the industry. We are in a multi-decade development cycle. It takes a long time to introduce these new technologies, but then bring them to production, produce in scale, and then, as we've seen on the existing platforms, ensure that they deliver the reliability, performance and durability that's expected from the airline business models. So we think that overall this technology environment that we're in is the most stable that we've seen, with very little risk of leapfrogging technology right through in any kind of scale production right through towards 2040.
So you're seeing stability on production, you're seeing pretty strong demand, you've got a stability picture there. I'm just wondering where the instability therefore comes from. The bond yields, obviously a huge factor, particularly for a lessor. That is one of your huge costs. What is happening in terms of borrowing is one. What happens on exchange rate probably is another. Like I'm hearing 120, 130, 140 in terms of euro dollar. Could there be a financial disruption for this industry?
Yeah, and this industry has shown its resilience to multiple external shocks, be that financial crisis, be that COVID, be that oil crises in the past. Overall, what we're seeing is, you're right, that the production, supply, demand is all there. We've played that trend. We've got 457 aircraft in our committed fleet, the largest of our sector. In terms of resilience and ability to weather the shocks, we've just been upgraded to mid-BBB ratings. That's our biggest controllable factor in how we drive our cost of funds, is protecting and improving our credit rating for the business. In terms of overall financing conditions, they're quite benign at the moment. We see the current environment as...
Do you see that changing though? Because credit spreads are super tight right now.
Yeah, credit spreads are. Long-term rates are probably in a mid-range. Long-term inflation is in a mid-range. So the industry and all industries are always vulnerable to exogenous shocks, which change things. The leasing model and indeed the aviation model has shown its ability to really withstand quite extraordinary shocks and deliver continued performance, continued growth. This comes back to it's a demographic-driven growth trend which will continue for many decades to come.
Okay, so tell me where the growth's going to be and the type of aircraft you need to buy in order to satisfy that growth. Where are you looking to expand, and what kind of aircraft are you looking to put into those kind of markets? What are you going to be buying from Airbus and Boeing?
Yeah, so Boeing and Airbus published their own 20-year forecasts last week, and within that they highlight about half of the growth is coming from Asia, is coming from India, is coming from emerging middle class. That's where the bulk of our portfolio is weighted, and that's where the bulk of our committed growth will deliver into. That growth is driven by just simply the rising middle class and the growth of affluence and wealth in those economies. The type of aircraft, the largest growing sector is going to be that large narrow body sector. So the A321, the MAX 10 type range of product, that is what airlines around the world are looking for as they seek operating efficiencies, deal with slot constrained airports, and try to drive the best value for their
Airbus need to ramp up even further. Boeing need to get beyond the cap. We need more of those kinds of aeroplanes. Do you see those aircraft coming?
Yeah, I think the manufacturers are constrained by what they can deliver, simply by the upstream production capacity, foundries, castings, engine supplies.
Yeah.
These take long investment cycles to actually build new capacity. And that's what makes us quite comfortable about that balance of supply and demand for the next decade.
The fight for available slots at Airbus and Boeing is going to carry on.
Absolutely. And that also, of course, drives up the reinvestment into older aircraft, the amount of maintenance revenues for engines, which might get that third investment and upgrade rather than just getting to two investments in terms of the maintenance refits of those engines.
Great to see you, Andy. Thanks very much indeed for stopping by to see us.
Thank you.
Andy Cronin, the CEO of Avolon. Tom, from the Paris Air Show, back to you.
Guy, another great conversation. Thank you very much indeed. Guy Johnson talking to Avolon's CEO, of course, Andy Cronin. And Guy will be speaking with Virginia Governor Glenn Youngkin from the Paris Air Show. That's around 10:15 a.m. London time. So stay tuned for that conversation. Oil fluctuating as traders react to comments from President Trump calling for the evacuation of Iran's capital. That's as Israel vowed more strikes on the country. Let's bring in Bloomberg Middle East energy reporter Anthony Di Paola from Dubai. And Anthony has been kept busy, along with the team, of course, on the volatility around oil. So that call, Anthony, from Trump to evacuate Tehran, that really spooked the markets, and now we see prices higher.
Yeah, I mean, we're really reacting, Tom, to headlines here as we see the price bounce around, starting off early yesterday with up 5% and then down later in the day as there were reports that Iran was perhaps looking for talks. And then, again, Trump deciding last evening that he wanted to leave the G7, that pushed oil again in the comments today. So we're really reacting to comments as people look at the headlines and then look behind them and try to see what is actually going to happen here. So we've seen a lot of kind of false starts and then pullbacks in this, and I think that's the way things are going to continue. The fundamentals haven't changed. In the previous interview that Guy was doing, you heard that executive talking about demand in the airline sector, and that's one thing that traders have been pointing to underpinning the oil market, that demand has been high for jet fuel as people travel, for gasoline. But we were expecting that to weaken going into the second half of the year. So that was the underlying fundamental picture. And we haven't really seen that threatened by the current hostilities in the Middle East yet. There's been no attacks on oil production facilities, the crude oil production facilities that are very important for supplying the global market. We haven't seen any strikes on any export facilities. We're watching very closely shipping. There is an incident that we were looking at that happened last evening where two ships collided just outside of the Strait of Hormuz during the night. We are looking at that. So far, the reports are that it's not involved, not linked to the current conflict, but that is, of course, something that we're watching because the Strait of Hormuz is a vital waterway for getting oil out. But right now, so far, exports are moving, and we haven't seen any impact on production yet, Tom.
And yet freight rates are moving higher as well. So we've got that fundamental story versus the headline impact as well on the oil markets, as you were saying. Meanwhile, a longer term view and the latest forecasts, Anthony, from the IEA this morning. What are they saying particularly about China and the demand from the world's second largest economy?
Yeah, they're bringing forward their estimate for when they think Chinese crude oil demand is going to peak. So they're saying oil demand peaking in China in about 2027. So that's earlier. And then in general, 2030, global crude oil demand peaking. And this has been a discussion in the oil market going back and forth because you'll have countries like those in OPEC, companies like Saudi Aramco, that are much more bullish on the future of demand. So they'll say that, China is not going to peak, that we're going to keep seeing increasing growth. Interestingly, we have been seeing record global oil demand for every consecutive year for the last few years. So every time oil demand does grow, that's a new record. Of course, we are seeing slower demand growth, and that's why we're seeing this kind of slack in the market so far going into this year. That's why OPEC Plus is still restricting production. Granted, they are bringing oil back, but they've got a lot of oil still kept off the market. So we're seeing this kind of longer-term view where oil demand is lessening, oil demand for transport fuels is lessening, and that's really what the IEA is talking about there, that key market of China, whether that is going to peak sooner than expected or later than expected. And that's a key question for a lot of the economies here in this region, Tom.
Yep, the longer-term view coming through from the IEA on peak oil in the here and now. Brent up 1.2% at $74 a barrel. Bloomberg Middle East energy reporter Anthony Di Paola from Dubai. Thank you. Later, watch out for an interview with the son of the last Shah of Iran, Crown Prince of Iran, Reza Pahlavi. That conversation is at 12:30 p.m. UK time. Now, UK Chancellor Rachel Reeves is reported to be considering reversing a decision to charge inheritance tax on the overseas assets of so-called non-doms. According to the Financial Times, the Treasury is reviewing the decision to abolish the tax break for non-domiciled residents amid a wave of wealthy individuals departing and lobbying from the City of London. The plan to replace the regime for wealthy foreigners was drawn up by the previous Conservative government. but deciding to apply the UK's 40% top inheritance tax rate to worldwide assets has been a major recent change under the Labour government. Meanwhile, the wealthy in France are intensifying asset protection efforts. That's after the resurgence of tax the rich policies during last year's election raised fears they will be a target as the country seeks to bolster its finances. Wealth and property advisors say well-off residents are taking or considering taking bigger dividends from their companies. They're also diversifying stock portfolios and weighing the sale of high-end real estate in case of more drastic tax changes once President Emmanuel Macron departs in 2027. And Bloomberg has learnt that Barclays has hired McKinsey to help simplify its investment bank and identify where hundreds of millions of dollars of savings can be made. The consultants are said to be examining the bank's front office, finance, risk and technology divisions and are looking for where tasks can be automated. Bloomberg has also learned that talks over a minority stake sale have valued hedge fund giant Millennium Management at roughly $14 billion. Millennium is one of the world's largest hedge funds, and its septuagenarian founder, Izzy Englander, has been considering a stake sale for more than a decade. Coming up, signs of caution from the BOJ. As the Central Bank of Japan stands pat on interest rates, we will have the details next. This is Bloomberg. Welcome back. The Bank of Japan has held interest rates and unveiled a new plan to step back from the bond markets at a slightly slower pace. It's the latest sign of caution from the central bank following heightened market volatility. Bloomberg's Valerie Teitel joins me now. What was announced then from the BOJ and how the market's interpreting this?
Yeah, so it was fairly in line with what the market was expecting, that they are beginning to slow their pace of tapering from fiscal year 2026, reducing the run rate of reductions from 400 billion yen to 200 billion yen. Now, this is important because there has been a lot of volatility going on in the long end of the bond market as they've been undergoing this tapering, and these small tweaks can really play a big part of the market. The Bank of Japan owns 50% of JGBs. So whenever they have a different tact, it can have a big impact on the market. So it seemed to be like the market really wasn't absorbing this pace of tapering before. And so they've gone and adjusted it to a slower pace. They've also announced some other small tweaks. They have increase the number of securities which they're willing to lend out to the market, increasing repo operations, just because the Bank of Japan owns so many bonds. If they're more willing to lend out and borrow these securities at an easier on easier terms, it adds more liquidity to the market. And I think that really was their end goal today in this decision. Yeah, it's interesting talking about liquidity. Jim Reid of Deutsche Bank saying earlier that he thinks we should look to July or August in Japan for potentially additional fiscal stimulus as they ramp up around elections and the political story in Japan as well. So that was interesting. On the trade front, and we talked about the volatility and the sensitivity, particularly at the long end of the JGB curve in Japan. But the comments from Governor Wade about the uncertainty in the current environment at a time when we saw that failure of the US and Japan to strike a trade deal at the G7. Yeah, Ueda had some pretty strong language calling trade policy extremely uncertain. And a lot of that does hinge on whether Japan and the US do come to some trade agreement before the reciprocal tariff deadline earlier next month. A lot of the sticking points is assumed to be around auto tariffs. Auto tariffs are huge for Japan, making up around 10% of GDP, even employing around 8% of the nation in the auto industry. So perhaps why Ueda is stressing this extreme uncertainty, because whether they do get some deal on auto tariffs could really impact the economic outlook and the inflation outlook for the nation of Japan. But as you mentioned, Trump and Ishiba did have trade discussions yesterday on the sidelines of the G7. Didn't lead to any breakthroughs. If anything, it seemed a bit disappointing. The Prime Minister Ishiba saying to the media that the two sides are not on the same page, and this is the clock ticks down to July 9th. OK, that uncertainty remains in terms of the trading relationship between Japan and the US. 144 right now in the Japanese yen, largely unchanged versus the US dollar. Bloomberg's Valerie Teitel, thank you very much indeed. To tech right now, OpenAI has won a $200 million contract with the US Defense Department.
aimed at helping the agency determine how to use artificial intelligence for admin and security tasks. Charlie Wells is here with the details. Charlie, there's a broader significance to this, which is tech companies increasingly getting involved and getting closer with the Defense Department. What do we know about the specifics of this deal between OpenAI and the Defense Department?
So, right, we know this isn't a huge amount of money, but it does represent this kind of shift into defense. And, it's a one-year contract, and OpenAI is supposed to help the Department of Defense figure out how to use AI to do things like get health care to members of the military or prevent cyber attacks. And it's sort of along this idea of, soldiers win battles, logistics win wars. And this is kind of a use case for AI, right? I think one of the questions we hear from a lot of investors is, what can you really use AI for? Clearly, the American military is seeing on the logistical front a very specific use case here on those administrative tasks. But we've also seen a lot of other firms get into defense as well. So Meta just invested $4.3 billion in Scale AI. Scale AI also has a contract with the Department of Defense for planning and operations. Meta itself last year opened up its AI models to defense agencies and contractors. So we're seeing here demand from the likes of the Department of Defense and a willingness by these AI companies to meet that demand.
Yeah, and it's quite a shift, isn't it? Just in the last 6 months or so, that's been quite dramatic. We continue to see that relationship deepening. Meanwhile, on OpenAI, talking of OpenAI, there are reports that its key relationship with Microsoft is under pretty significant pressure right now.
This is a report in the Wall Street Journal that basically says executives there talked about a nuclear option of basically accusing Microsoft of anti-competitive behavior during their partnership. And this just speaks to a deteriorating relationship between OpenAI and Microsoft, which used to be a very supportive one, but it's become increasingly competitive over the years.
Charlie Wells, excellent. Thank you very much indeed. Summing up some of the big moves in terms of the tech sector, the deepening relationship, of course, with defense and tension, it seems, according to reports, between OpenAI and Microsoft. There's a lot more coming up. Bloomberg Brief is up next. Risk off across these equity markets. Oil prices are up. The eye and focus, of course, on the Middle East. Stay with us. This is Bloomberg.